Regular market analysts, Walt Hackney and Doug Jackson. Walt, Doug, welcome back.
Thank you.
Good to see you. Doug, let's talk about this soybean market because that seems to be dominating so much stock in farm country these days, especially the corn and soybean belt. An up week this week, a close above $10 on that May contract. What do you think is what's ahead now for beans?
Well, market enthusiasm was re-stimulated this week with the crush report that showed only a minor decline from last year. And so we faced the prospect here of having to cut demand catastrophically in the latter part of the year to end up with any inventory at all. Now, this is an old story, but it's the same story. And we've gone through now 6 or 7 months of the crop year, and we've shown no evidence whatsoever now of any reduction at all in either oil or meal usage in the United States, despite, of course, $10 futures. So the market panicked a little bit this week, and we're still on a glide path. We're still on a track to a carryout that would be far below anything we've ever tolerated before, the previous smallest carryout being about 130 million a few years ago. And right now we'd suggest that we're on a track to a carryout somewhere between 0 and 50 million bushels. So the market's trying to deal with the prospect here that we simply have a potential here of a lack of supply at any price in the latter months of the crop year for the domestic market. And the way we solve this, of course, is to move the North American, South American spread to a level where we can import large tonnages into the U.S. And what we're talking about here, Mark, is something that might mean importing 10 or 20 times as much as we've ever imported before. So we don't even know if this is possible, particularly if we try to do this in a very short period of time in the latter part of the crop year. So a market that's just going to be scared to death. Cash market levels are well above delivery values. You're going to see people stopping the futures. We've got to take the South American basis down, these U.S. futures higher, until we can import a large amount of oil and meal. Oil's coming in now. We're not sure exactly where the meal can be brought in. It might not be too far away, but we probably need to stay at that level or trade higher if we're not importing enough later in the season. It's going to be a very volatile market all the way to the end of the crop year.
Talked to a lot of producers. Very few seem to have beans left, except for maybe the old gambling bushels.
Well, stocks are near 25-year lows, of course. And then, of course, the whole thing is exacerbated by lower South American production numbers. We had several this week. It's interesting, however, that if we examine the history of these private analyst estimates in South America, they have a tendency to underestimate the crop by about 2.5 million tons every year. So we may be racing to unrealistically low numbers there, but that just makes the new crop situation bullish too, Mark. So we have a multi-year problem here in this oilseed situation with a rare case of simultaneous droughts now both in North and South America in this last crop cycle.
Real quick strategy for new crop.
We're not excited about selling those new crop beans. Too many things are possible. May 12th, you'll get your new crop supply-demand estimates from the government. That's going to be fascinating. I want to see how they structure those new crop balance tables before we do anything out there. The crop's as much as 10 million tons smaller in South America today than when they put out their February projections a few months ago.
Let's talk about corn market, particularly new crop. People are saying, gosh, maybe we missed this corn market. Are you in any kind of a hurry to price new crop corn?
The only reason I would even vaguely consider the idea that you've missed selling opportunities on Deese corn is if you are absolutely sure that this is going to be a record weather and a record crop year. Otherwise, Mark, really relative to the risk, the volatility, we think the corn market's a lot more bullish than the soy complex. You have any weather problem at all, the corn market will explode. You have a marginal or moderate weather problem, this will be a repeat of 95, 96 with the $5 corn futures. We learned the lesson then that we had to go to $5 futures to cut 750 million bushels worth of demand. We think you got a 10-6 demand base next year. You don't have many more acres. Any kind of a weather problem, you'll put 50 cents on this corn market in a week. And in fact, we're watching the heat now in the western United States. It's already making news. Electricity going up because of that. You have any innuendo that heat's coming towards the corn belt at any time during the growing season, and the corn market will literally explode. The problem is that your two major producers of corn in the world, China and the U.S., are facing the same basic problems: a lack of acreage, surging demand, and abnormal weather problems.
Though, I want to talk about the wheat market, which we just mentioned. Really, we're at pre-harvest lows on wheat. Fundamentals there, are they that drastically different?
At the moment, the world wheat production situation may rebound sharply. European crops look good. Eastern European crops look good. The U.S. crop will be smaller than last year, but probably not down enough to contract stocks appreciably. We're going to build U.S. Major exporter stocks this year, but the wheat situation is not so surplus that it can tolerate a corn problem. The bottom line is what you need to know about wheat prices is where's corn going. If the corn market explodes, the wheat market can't control that, and the wheat will become a feed grain. In a perfect, weather environment, wheat can lose slowly to corn, but again, corn price action will dictate wheat potential. Wheat prices may drift down some from here into harvest. It's probably the best sale of the three grains, but can still follow the corn market all summer long.
Excellent. Well, that's good insight, Doug. Thanks so much. Let's switch over to livestock and bring